Hello everyone, this is Evan here from the Trade Risk on Friday, November 25th with a weekend market recap video. We are going to keep things a little bit shorter this time around. We're going to cover just the major markets, some sector analysis, and that'll be it. So just at a high level, kind of show you what's going on, some sectors that are leading, lagging, and point you in hopefully some direction into next week. Before we get started, I hope everybody had a wonderful Thanksgiving away from markets. Time with friends and family. It's a great time of year. I love it. So I hope you had a great day off. Secondly, in light of sort of the shopping frenzy that is Black Friday and Cyber Monday, we are also participating here, and we have some promo codes for you guys if you've been on the fence of looking at some of the services we offer. If you head to thetraderisk.com, click on Get Trade Alerts, and if you enter in these promo codes, Thanksgiving Monthly or Thanksgiving Annual, you will see those discounted rates reflected on your checkout screen. So take advantage of that if that's something that interests you. And also, we launched a brand new service just this week called Signals. It's a very inexpensive way to get all of our trade ideas, all of our trades that we're taking ourselves every time we take them for an entire year for just $295. That's basically $1 a trade alert. It's a pretty incredible price. Never priced anything that low, and that's good also right now if you head to thetraderisk.com and click on those Get Trade Alerts. So check it out. It's a different package, right? Gives you some different things, but I won't go into the whole spiel here. You can read about that on the site. If you guys have questions, just please use the contact form and let me know. So on to the good stuff, on to some market analysis here. Let's take a look at the SPY ETF, S&P 500, and take a look at where we are. Start with the weekly chart just to show you where we're at. We'll get this out of the way here. We closed at the highs of the week, and you can see we just continued this rally higher. If you remember, 2 weeks ago, we had this nice kind of reversal here through pre-election to post-election. We had the follow-through week last week, and now we are seeing more continuation higher. So we are at all-time highs. We've cleared all nearby resistance, and life looks good for the bulls. You can see MACD is maybe a little bit sluggish, coming off of basically a test of the zero line. That was after just so much consolidation here for an extended period of time, but I'm not going to use that to build any type of bear case. Higher highs, higher lows on the weekly chart, no overhead supply. That's the type of market that I want to be long and participating in. So that's what we're doing. That's what we have been doing. Back to the daily chart, let's give you some context about this run. So everyone seems to be, pointing to how overbought we are right now, and I do agree, but that certainly would not get me short at this point. Take, for example, the Brexit rally here, this V-shaped move we had off of the late June price action. This rally extended for 18 points, 18 SPY points, before we started to put in a meaningful consolidation. So that was from 198 all the way up to about 217 in the SPY, and then you saw this consolidation start to take place. If you were to sort of overlay that to the current rally we have starting from 208, that would get us up to about 226. And again, there's nothing scientific about this, not saying that it has to get there. I'm just looking at the measured move of this rally and projecting it onto this rally, and that would get us up to about 226. So yes, we are overbought, but markets certainly can remain overbought, as quite frankly, the majority think we're overbought, right? That's why it tends to go higher, because it's tough to chase. Nobody really wants to do it, but there's no aggressive sellers, and markets kind of just levitate higher. So that's something to just keep an open mind about. I do recognize that it may be prudent to be a little more selective with new longs where we currently are, but I certainly, at least for my strategy, and the way I see it, I would not want to be trying to pick a top or start building up shorts. Again, my position, my strategy, it's all going to depend based on your time frame and how you approach markets. So that's the way I look at it. S&P 500, life is good, right? We've continued to participate in this. We did take some profits this week, so we are down. We had basically 100% exposure for a good period of these past 10 days or so. We're down to more of a moderate 60 or so percent. So we still are participating, but we're not as aggressively sort of reallocating that capital into new positions. We just want to wait and continue to sort of trail stops and let things work for us. If we go to the IWM, certainly, right, this is breaking records. I think this is now close to the longest up streak in history. I think it's at second right now, and that's... man, I'm not sure who that could have been, either Charlie or Ryan Dietrich that was putting out that stat. So it's not my words. I believe from what I had saw earlier, this is the second longest winning streak in the IWM. So very, very, very impressive. Tons of strength here, tons of reallocation. It's just a complete bid and chase. It's at all-time highs here. Very constructive. Same comments apply though to as to the SPY, right? Very overbought. I wouldn't expect. Traditionally when you see this type of momentum move here, you generally don't get a sharp move lower as far as retracement and price action goes. You're mostly going to get a consolidation through time. Again, not saying it has to turn out that way, but it's another situation where I would not try to be pick the top. I'd rather just be buying dips, letting things cool down a little bit, picking individual stocks and sectors. But the IWM right now is very, very impressive. The Qs, they are the laggards right now. They haven't cleared these highs here from October. Remember, this is the NASDAQ 100. The composite is at all-time highs, but the Qs, the power shares, the Qs are still underneath these October highs. But they still look pretty healthy, right? We're just underneath them. And quite frankly, this could be a nice rotational sector if some of these small caps need to take a break, if some of the financials and industrials leading the SPY need to take a break, then the Qs could be ripe for a nice rotational kind of sweep and take that kind of next leadership role and power this market higher, or just keep the market sort of resiliently holding up. So keep that in mind. Don't throw the Qs away. Just keep an eye on them. Look at some of those individual components, and you might start to get a rotational trade into those especially if you see us start to take out these previous highs here. So keeping it on watch, not really where I'm allocated now, but something I am paying attention to. With that said, let's move into some other markets here. TLT continues to sort of get beat down here. It's at this line here. Remember, we pointed this out. This is the prior January year-to-date lows. So we did make new lows here on Wednesday, but you did see a bit of a reversal, and we held in there on Friday. So you have to wonder, is this some type of mini capitulation here? Are we going to actually hold at this 120 level, which was the January lows? Be very interesting. Still get a lot of momentum to the downside, but we know how historically sort of this is another sort of record breaker on the amount of sort of unwind here in the bond. So keep that in mind. Not something I'm involved in now, but just paying attention to see how that one acts heading into next week, into the end of the year. We'll go to oil next, which it's kind of been all over the place. Saw a nice reversal off of these lows here at the bottom end of this range, and then it got clobbered here on Friday. There is the big sort of OPEC meeting that is happening, I think, next week. I don't have the date on it. I have no position in there. We were trading this in here for a little bit, but we're flat USO, just kind of waiting to see how this all shakes out into year end. So far, I think, 985 or so, exactly where this reversal candle happened. This is going to be an important line in the sand for the bulls to hold, heading into the end of the year. I think if we're above there, you can look at this market semi-optimistically in this range. Otherwise, if we start to break below that level, you'd have to get a lot more concerned. And then, of course, you have this 1078 or the recent highs from the past couple of days. So keep an eye on that. Just be aware that you do have some headline risk coming out for the oil markets. UNG continuing its nice rally higher. It broke this support line, came all the way down here, and then it's just kind of moving higher. You can see MACD now is almost going positive as well. So sort of interesting turnaround here. In the grand scheme of things, it's about probably only a 30-40% retracement from the move that started at 950 all the way down to 680, which is 30% move down. So it's putting in a good a sizable retrace. It's tough to chase it here, tough to do too much with it here, but something that could set up for us down the road. Doesn't look too actionable just yet. GLD gold continues to get hammered here. If you take a look back here, it looks like it filled this gap from February 5th. If you believe in gaps here on some of these markets that trade futures markets that trade around the clock. Either way, it did fill that gap. It is looking horrible here, though, from a structural point. You can see it's just making lower lows, lower lows, lower highs. Momentum sharply lower, so no signs of a bottom just yet. It is stretched. It is likely due for a bounce, but it's anybody's guess when that actually happens. Silver, on the other hand, actually kind of held in there on Friday. Notice it did hold above Wednesday's lows, or Wednesday's price action anyway, certainly the lows and also the close of the day. So a little bit of a more constructive relative strength brewing here in SLV. We'll have to see if that materializes into more of a bounce heading into the last week in November into December. But SLV still in the same problems that gold is having. It's in a downtrend and looks pretty vulnerable at this stage. It is oversold though, so you do have some opportunity there if you are pretty tactical. I think that covers up some of the major markets there. Let's move into some sector analysis. IYT first. Look, no surprise, this has been on our top sort of relative strength leader list, and it just continues to do so. It's an absolutely impressive move here. If you go to the weekly chart, you can see, like we talked about, probably marching back up to these highs here of 2015, and it's pretty close at this point. It's about probably another week away if it continues at this pace before it starts tagging these 2015 highs. Been some monster leaders in this, in this sector here, and it continues to work. We continue to have some positions in here, so it continues to work until it doesn't. It is overbought, but we've sort of covered how that goes. XLI, again, no difference here, right? We've talked about XLI Industrials being the leaders. They continue to lead. MACD making new highs. Price just continues to levitate well above the 8-period EMA, so a lot of strength there. XLY discretionary also catching a nice bid here. If you go to the weekly chart, getting a breakout move this week above all of these previous highs, resolving this range to the upside. Lots of strength there. SMH finally, right? We talked about that, put out a post last week on this as it started to break above this resistance here, and this continues to just move to new highs, up almost 35% on the year at this point, so quite a bit of leadership there. And then finally, just one last point out there is XLK, right? This kind of gets back to the Qs as this chart looks pretty similar, but just keep an eye on technology here, as if you can start to get above $48, you're going to start to see more rotation and some more breakouts probably emerge in this sector. So keep an eye on XLK next week, see if it can get above this week's highs. Could start to get some fresh money in there heading into the last week of November. On the downside, and we're going to finish here on today's video, IYR, right? Nothing changed here. Real estate ETF still lagging on a relative basis, still in this downtrend line. That's still holding true. And then finally, XLU, very similar situation here as TLT gets clobbered and interest rates start to rise. XLU suddenly not as attractive, and it's still in this pattern here. If you go to the weekly time frame, maybe you still just have finally a meaningful pullback on the weekly chart that's buyable from a longer term structural trend following or tactical approach. Something to consider, not something I'm in right now or really looking at, but if you go to that longer term time frame, you can see we are still making higher highs here, from a long term basis. So that is the video for today. Thank you everyone for watching. I hope you guys have a great rest of the week. Remember, if you do want to take advantage of any of our services, you can head to traderisk.com, use those promo codes, get a hold of me if you have questions. Thanks for watching, and I will talk to you soon.